In life, just as in trading, we need to be proactive. We need to be reactive and proactive at the same time. Kind of silly, but it's true. In life, we need to be proactive if we are to be successful, because we need to be prepared for all the possibilities that could come. And the way I made my trading successful is by making it reactive and proactive at the same time. First of all, I'm reactive to the charts, and I'm going to explain to you this soon when we go onto the PC. I'm reactive. As the market moves, I move with it. And I'm going to explain to you this so you guys understand it fully when it comes to actual live trading. I've got a couple of positions open, as you can see in the background. But being proactive is actually quite important because it helps us to prepare for possibilities before they come. If you've been watching me for a while or watched any of my courses, you would know that I explain that you always need to check the upside and the downside before and during before you enter a trade and while being in a trade. This is extremely important. And we're going to go in the charts in a couple of seconds here, and I'm going to show you exactly what I mean. But what I want to tell you too before I take you there is that you need to be organized when it comes to trading. If you want to make things quick for yourself, the first things you need to do, even though I created the system that we're using, I actually have it written down right here, and it tells me exactly, and I check it every single day, and sometimes a couple of times a day. And I remind myself of my trading system. The other things that I've got is my watch lists. For example, I just started trading with Blackwell. That's where one of our MAMs are. And the whole watch list, all of their assets are listed right here. And what I do is I check this every morning. And then so every time a 4-hour candle starts and before it finishes, I sit down and I check the charts. And that kind of helps me be organized and find more opportunities. It makes me proactive to the markets. Anyway, this is pretty important, but let's go into the charts so I can show you about being pro and reactive at the same time. Okay, so what I'm going to do right now is separate the two words, reactive and proactive. So, reactive to me means checking the charts as they move. Normally on a 4-hour chart, what I do is I check them every 4 hours, logically, right? I usually zoom into the charts about 15, 10, even 5 minutes before the 4-hour candle changes. Now what I'm doing, the main thing I'm doing as being reactive is I'm consistently checking the upside and the downside potential of each trade. In this example, I'm using Euro NZD. This is a trade alert we released, I think, last week. Yep, last week. It's in the profit, and I'm going to show you what has happened here. So the first thing I did was I gathered intelligence on entering the trade. Now this is a basic contraction pattern that we trade at pipsmatter.com. I love giving free information out because it's important to showcase each trading system, and there is not a lack of money, let's say, in the financial markets. I mean, there is an abnormal amount of money that anyone can earn. So if I can help somebody do that, then be it. So be it. Okay, so this trade was entered. First of all, we have a nice little reversal candle right there. I'm going to show you right at the bottom of the contraction. I'm going to show you why I entered first. So there is the candle. We had a bullish push, rejection to the downside, and that was the confirmation. That's when I entered as soon as this 4-hour candle was wrapped up. Boom. And then we had a nice bullish move. Right after that, what we had was a break of the EMA. So I'm showing you how time went with this trade. Then you see these black lines here. Well, this is a bullish flag that was being created. I checked it on the 1 hour first, and it was slowly building. The next thing I noticed is that price action is slowly kicking right at the 13 EMA, and that gave me a reason to re-enter. We did so. It went up. A couple of trades were closed on Friday. Today's Monday. Price action went down right to this key trading level. Now, I'm continuing to look for reasons to get out and to get in. I got out because of this candle here. This is what I mean about being reactive. Something's happening and we're continuously looking at ways to get out, get in, and so forth, and slowly build our positions and earn money on the move up or the move down. Now you can clearly see that there is a neckline being formed right there. So that's what we're going to be drawing that right now. We have a nice little neckline which formed based on that rejection. So when this closed, I realized, okay, that's it. Let's get out of these trades. I got out of these trades and I started buying down here again. So we can see that there is a steady little trend line here controlling this move. and we're expecting a breakout in this candle and a continuation to the upside. So there are no reasons to sell until we have a breakout of this purple line and price action continues going lower. Then our pattern has failed and we move on. Being proactive, so I'm going to explain this right now. So being proactive means we're taking into account possibilities and scenarios that can happen. So this comes again checking the upside and the downside. It's reviewing a bit of fundamentals, understanding what's driving price action and what could drive price action. This is how I predicted some major moves in the markets where everybody else was, for example, selling oil, I was buying it. When everybody was selling S&P 500 a couple of months ago, when they were buying S&P 500, I was actually selling and I earned big. So did my investors. So being reactive to the market simply means continuing to scout the markets. You don't have to do it for hours on end. The main thing is to spend some time in the morning and just check your watch list. You saw my watch list. I have all the possible tradable pairs my broker provides. I have them written down and I go one by one very quickly on a 4-hour chart, sometimes on the daily, depending on how much time I have and what I'm looking for and what strategy I'm employing in the markets, what time frame I'm looking to profit on. For now, I'm sticking to the 4-hour chart. I'm looking to build up my equity. So 4-hour charts are pretty quick for profits. Daily charts take longer but can earn much more. Yeah, we're looking at a move towards the upside here. The scenario is basic. A break from this trend line. We continue higher. We have a key resistance right here, 1.69525. That's the neckline. If this gets broken, we target the next take profit, which is this one here, and second take profit is here. Based on how the price action is moving towards this one and what's happening here, that's when we start reacting and deciding what we're going to do. So being reactive to me is a bit more important than being proactive. I never want to predict the market in a sense. I really don't care where price action goes after the take profit because there are so many pairs I can trade, different markets I can trade. I do not want to be stuck in positions. And the main problem I had recently, and I'm still having the same problem, is being stuck in Euro GBP. And the main reason I'm stuck in that is because I entered it on a daily chart. So I decided to separate the MAMs into two different MAM accounts. So one is going to be focusing only on 4-hour charts and the other one just on daily charts. This way the risk rewards, well, let's say not risk rewards, but the time frame of the profits and the trades will be different. Anyway, this looks good. It looks like it's breaking out. So I kind of explained to you guys what's going on. You're gathering intelligence, you have the contraction, and then you build it. Now the only way I'll enter a trade is if there is one of the free patterns that I trade. In this case, the contraction. I really don't care about the head and shoulders. The head and shoulders is just helping my contraction. That's how I see it and that's what I'm focusing on. And that's pretty much it. So Euro NZD looks solid. I'm going to go over CAC 40 here, the French stock market. And you can see that there is a nice contraction which formed over here. Now we do have a fake out, well, not a fake out, but a gap up. Let me show you that here. So this area here, we had a massive gap up and price quickly went back in, made a nice little pin bar here indicating bearishness. It came back down, went up, came here, and now we're out of the area. Now we didn't gap out of it, which is very important. On the 4-hour, you can see that we haven't gapped out. We are below the 13 EMA and I've released the entry signal, I've released the entry signal on this trade. On the previous candlestick there. So there is a take profit 50%, 50%, and like I said, depending on how price action reacts as it's going down, I'll decide whether I hold it to take profit, whether I get out early, whether I compound the trade, and so forth. So excuse me one sec. So yeah, that's pretty much it. I just want to show you guys very quickly what's going on and how you can do this too, and how you can be reactive to the markets. My name is Denis. Thank you for watching and have a good day.